Testing. Traders, what's up? Jamie Saettele here. It is January 13th, 2016. Jamie Saettele here with the Midweek Strategy webinar for SB Trade Desk. And want to get started right off the bat. As you have certainly noticed, we've been looking primarily, or focusing a lot, I should say, in the in the swing updates on various S&P 500 charts, and we're at that that juncture right now, or that point where it's kind of all the same market, if you will, right? What do I mean by that? I mean everything is moving together. So pretty simple stuff. I mean, you've got the S&P 500 is the black line right here. This is where the year started. This is 15, 16. Red line, Japanese yen. Magenta line is the Aussie, and then you've got in blue the euro against the U.S. dollar. So you'd actually kind of have to flip the euro over. You have to look at the inverse of the euro to get this straight correlation with these other markets. Just real quick, make sure you guys can hear me. I just don't have any confirmation so far that anybody can hear what I'm saying. So I want to make sure that you guys can hear me. I can. Okay, great. Mustafa says I can. Hossein says okay. All right, good. So the point here basically is that kind of simplify things, right? Simplify the analysis and take a look at the S&P, and if we can get a sense where the S&P's bigger moves are, then we can get a sense for where the euro's headed, where the yen's headed, where the Aussie's headed. So if you're trading at this point, you're kind of, all the markets can be together. And for me, I'd rather just kind of look at each market on its own merit. But then in the back of my mind, I also want to know, is this move that I'm looking for pro risk or not? Is it risk on or risk off? Okay. So as we came into the week with that analog, we were kind of thinking that we could get some sort of a rebound potentially, and we got that, and now we're selling off a bit. So it's definitely a range type of week. We're playing both sides of the risk spectrum, obviously, because of that. So, we have a euro long. It's not doing a whole lot at this point. We're in at what, 70, 74, 75, around where the opened the year. Continue to hold the 108. That's the big spot. The Aussie dollar long, obviously, is a risk on trade, and break even on that at this point. So really, whatever, just let it do what it's going to do. Just missed the target by about 10 pips last night, of course. And you've got the pound trade, which is kind of more or less kind of rebound, probably pro risk, but it's not necessarily as strong as Aussie, obviously, or as strong as yen. But pound for the most part is probably going to be more, with the risk on, although it's kind of doing its own thing today. All right, so let's get into the stock market a little bit as far as patterns and whatnot. Euro trade right here, S&P 500. I actually want to start with the short-term picture. So here's the short-term. This was a chart. I think we published this in 2 days ago, maybe, the update on Monday. And this is basically what to follow, I think, in the in the short term. So the big resistance from this short-term picture is up here, and it's around 1980s. I think we get there. I just don't know if we get there like before trying to test the lows again. Okay, and by lows I mean lows from last week, and then obviously on the 11th was Monday. Hold on here. What am I looking at? Sunday, sorry, and Monday. You know, the fact that we sold in hard early in the week and have rebounded, and everyone's extremely negative, obviously, tells me that we go back to test the lows. You know, for me, sentiment probably points, you know, to the likelihood that we try to make some sort of a rally attempt from down here. All right, so again, willing to be on both sides of risk at this point. You know, looking for those dips and holds on things like Aussie and Kiwi potentially, but also, you know, down to be with a euro long, which essentially is short the S&P or short the stock market at this point. So at this current juncture, middle range, not a whole lot to, you know, to do. The big area up here is 1980s, and this is a short-term picture, right? And if we look at the longer-term picture, incidentally, you actually have something quite similar as far as the 1980s are concerned, as far as that being a level, okay? And these are two totally different slopes, right? We're just looking at the short-term picture, which is going off, you know, an Andrews line, which is, you know, drawn off several 1217 high, 1220 low, and 1229 high. So that would be this fork right here, okay? Well, remember the original guy that we had all the way back here, this ended up being resistance back here, right? More or less support here before the big breakdown on the 7th, which was last Thursday, of course, when China came out and you know, weakened their currency substantially, and it was like kind of like August all over again. But that line now is going to be your ideal resistance point. And if we get it sooner than later, as in, you know, we get it over the next couple days, like this week, then that's going to run into a former support line as well, which, you know, you love to see former support become resistance, et cetera, in order to kind of verify that you are looking at a broader trend change, okay? Now, even bigger picture, of course, go to the weekly chart. As you know, we do have this really long-term support region all the way down to like 1850, okay? So, you know, with the euro long, if we do end up selling off down into this region, you're going to see a hell of a panic market, and you're probably going to see euro trade up to 112 and then trade lower if that happens, okay? So that's, think of the euro trade as almost like a hedge, being long euro, you know, and you know, being kind of like protecting yourself from if this starts to get out of control. You've got something to, you know, protect you and make some money off of it as well. You know, same thing that I, you know, came into the week really looking at was the analog with 2000, right? The 2000 market looks awfully similar. You hear a lot of people talk about 2008, right? Because it's fresh in their minds. It was the most recent market event, okay, that would be anything similar. You start to get the market heading down, everyone starts immediately talking about 2008. It's just human tendency to do so. We came into this week thinking that we could have a couple lows, false lows. We actually appear to have gotten that first low, obviously, on Monday. Little, you know, you can see here the analog we're looking at. So if this is Wednesday here, you know, we could end up sideways a little bit, sell off for a couple days into a Friday low, and then reverse. So that would make, you know, kind of your Friday low in the equity markets, if you will, and then we could go into a much bigger advance. Okay, so that's what we're looking at here. Is the same thing that I wrote about on Sunday night. There's a question here from Raj asking, one of your team members in FXCM said euro might not be correlated with stocks anymore due to hedge funding or something. I'm not real sure what you're talking about. You know, I can tell you that it's pretty obvious that, you know, when the markets sell off, you know, hard, and you're getting kind of that panic grip market, that you do tend to get the euro rallying. So the relationship's still there. I mean, the euro, when stocks sell off hard, the euro rallies. It's a funding. It acts like a funding currency. Okay, so trade what you see, and what you see is the euro rallying when stocks sell off. It's pretty much about as simple as it gets. Um, So no need to complicate. But this really, folks, this really is kind of the template that we're looking for this week. So, we've got some trades on that are working. Some that, one that's not, the euro's not really doing anything. But, the big opportunity for this week, if this continues to play out, is in, the analog that we're following. It continues to play out. What we're looking at is more selling, but culminating in kind of a panic low maybe towards the end of the week, as in Friday. Okay, so I still think that's on the table. And then you get a couple weeks of rip upside and what have you. All right, so go back to that post from Sunday night and study those charts, of course, because if you get the panic selling, you're going to end up having the opportunity to get some much more substantial panic lows, right? And those are kind of like the best opportunities. They don't come around all that often. Those are the ones that people dream of, that it's like the instant gratification trade where you get the V bottom where that reversal that all of a sudden is 500 600 points in a couple of days or whatever. If we're going to see something like that, it obviously is going to come on a panic low in the equity market. And if that's going to happen, I think it's going to happen on Friday. So remember those charts that we were talking about on Sunday night? You had CAD yen. I think you had Kiwi yen. You had, what else did I put in there? Pound yen, I think. So yeah, there's a few to look at. All right, now let's just get into some of the majors, okay? Actually, before I do that, I want to look at some seasonal studies because some of them are quite interesting right now. So first, we're going to look at the S&P seasonals because that's such a focus for us right now, as it should be. Okay, seasonals for the S&P, you actually tend to get turns higher, going back, across really all time frames. We're talking back to 30 years plus this study next week. Okay, so we're, if we get, I'm looking for the Friday low, but it's, good to have this in mind too, that, if the market does decline into next week and you get panic, next week is actually, from a seasonal perspective, is when the market tends to turn up, at least for a bit. Okay. Looking at some of the other seasonals, obviously dollar yen, really interesting. Same exact thing. Really not that surprising because the S&P and the stock market are going to be similar, right? The stock market and the dollar yen are going to be similar. So yen, and this is true for yen crosses, I should say. Okay. In general, you tend to get the turn up with the equity markets, of course, and that turns seasonally positive after next week as well. Pound dollar turns up after next week as well. Now we're currently long, but we had a good entry, so I'm looking to wait for the day to end here, but we'll be looking to probably move that stop to, I guess, break even, because we've got a pretty good entry, and it's no need, once you're money ahead, there's no need, in my opinion, to take risk. So we will look at that, but these are some of the seasonality charts that you should keep in mind. There are others, like Aussie and Kiwi, are pretty bearish heading into the end of the month, as you can see. This is Aussie. This is Kiwi. Okay, and this really goes into the end of January. Okay, and then the dollar index, generally speaking, is actually bullish up into very early February. All right, but we're kind of going against the grain with that right now. What's up, Mark? You haven't missed a whole lot, my friend. And plus, this thing's archived. Um, all right. So some of the seasonals to keep in mind, and we'll see how the market trades with them, or if it trades with them. But obviously, in the current environment, the most important one is the S&P, right? So watch this thing. Equities turn up after next week, but we might be looking for a panic low as per the analog in 2000 as early as Friday. Okay. And the levels keep in mind on the CFD, at least you've got 1980s, basically 1980, pretty flat there, 1980, followed by on the low side 1850. So it's a hell of a range, but kind of mark them down, write them down. 1980 get bearish, 1850 get bullish potentially, right? And that's if 1850 happens like over the next couple days. You want that panic, okay, to set in before you get the V bottom. All right. Okay, now we'll move on and look at some of the specific pairs. So what I'm going to do is check out the Euro S&P 500 just came back to the week open price. This is the futures, 1909 and a quarter. So interesting. That's very true, my friend. Very true. Okay, so Euro. Here's the slope that currently following. Right here, right? So I, mark these on your charts. June 18th high, 720 high, and 824 high. And you can see it's pretty clean the way we're trading around these things. Remember, I'm looking still, if we get that panic decline, you do have the impulse higher. You guys hear me again? Sound was gone. Okay, good. So every time it gets to 108, right? And 108, call it 108.20, but you get it. 108 area, right? Been pretty big. So here, back here last summer, broke it after some ECB stuff went down. It was resistance in November. Obviously ECB again, came back and tested it after the Fed on the 17th, broke it back above it. So, I mean, this is really, you hear people talk about bull bear dividing lines. This is as good as it gets as far as 108 area, in my opinion. That's why I'm kind of comfortable or fine being long Euro while above 108, because as long as it's above 108, you got the potential for that move up into the 112 region, which of course would be right here, okay, on this parallel, right? I would be looking to turn bearish up there more than likely if, 112 area, but, for the meantime, just let's not get ahead of ourselves. Let's think about what's up here with the here and now. And here and now, you look at the short-term picture, and you can see, you got a pretty good-looking impulse higher, right? And a real choppy decline. Okay. Why don't we look at that next, actually? Mark's got a question here asking about, do you see the relationship with kind of the euro-dollar inverse relationship broken? So something I was thinking about a lot over the last few days, because that is an interesting question. So here's US dollar is in the FXCM one, okay? I'm going to look at both of them, all right? And I'm going to look at the Dax. You're asking about the Dax, obviously. Is it broken? We'll look at that here in a minute. But I want to stay with the FX thing here for a second. we got the euro. Okay, we have the U.S. dollar index, the FXCM one, which is euro, pound, Aussie, and yen, and that's at new highs. Okay, it traded to its like highest level yesterday since like 2003 or something. And obviously the euro is nowhere near the lows. This would be driven mostly at this point, by the pound, right? And somewhat the Aussie, but especially the pound recently, with the way it's tanked into some long-term support, mind you. But this level, you're seeing a fractured market with this index at new highs. And here's the ICE dollar index, right? Nowhere near new highs. And this one obviously is going to look much more like euro. And then we have, of course, the original slope. That support back here, came all the way back in and acted as resistance at the last two highs. This to me is one of the best signs that all is not well in the in the dollar market. It's trying to make some sort of a tumble coming around the corner here. So that's something to pay attention to, in my opinion. Look at the Dax chart right now with the with the euro. All right, let's see here. Okay, so Dax in blue, euro in orange. Asking, is it basically broken at this point? I wouldn't go that far. Keep in mind, when the heavy selling goes on, you will see the Dax, obviously break down, and you will see the euro, bid. So, I'm not going to say that it's completely broken down at this point. The Dax level, not as much, right? Well, it's not a correlation like, that is going to be constant. It's something that's there when the markets are very fearful, right? So, it's not, you don't trade this as in like a, with like a strategy, like where you're going to, have them end up, one gets out of whack and they come back, on a daily basis or something. Generally speaking, though, the big highs in the DAX are going to correlate with the big lows in euro, right? If the DAX starts to rip face here, I doubt that you're going to see the euro hold up. And if, likewise, the DAX starts to break through support, I doubt you're going to see the euro not go absolutely crazy on the upside. Okay, and that brings me to, obviously, the Dax Index itself. And you guys have seen this, right? Here we are at support. This is the weekly chart. I published this to our site. I published it to Daily FX, right? If the DAX is holding up, okay, and what's the euro doing this week? It's not really doing anything. It's kind of like drifting lower, okay? Well, the DAX is kind of drifting higher. So they're inverse at this point. The DAX starts to trade off and gets below the support and things get panicky, the euro is going to get bid, okay, and it's going to go to 112. And if that doesn't happen, the downside risk is like tiny. It's like we're talking below 108. Where's our stop? Like 107.90 something, right? So that to me is a decent trade. I'm totally cool with that. All right. So yeah, here we are, holding on for dear life, right? On the DAX weekly chart support. So again, if this ends up going a little bit, even if it looks like one of these, right, where you get a wick down here or something, the euro is going to get bid because people are going to get scared the bejesus. They're going to be, freaking out and covering their bets, their hedges on the euro, because they're hedged, they're long DAX hedged because they're short euro at the same time. So there's that dynamic to me is still in play. there will definitely be a time when it won't be in play, but it's just like anything. You're calling an end to a trend. You're going to be early a lot, right? And it's like that if you're calling an end to a trend in price or an end to a trend in correlations, right? Same thing, same logic. Okay, these things can remain for pretty damn long. Okay, so now that is that, let's move on. So you saw the Euro chart, old support, resistance, etc., etc. There's more. Remember this one? I think it was this one. This one, we're kind of starting to trade outside of this one as well. Okay, you can see, ended up providing resistance here. We're kind of providing resistance here. So my point is that there is a chance that the dollar actually gets pretty weak across the board, given how this old support right here, okay, is kind of been acting as resistance for like the last 4 or so days, right? We spike up through, we come back. We spike up through, we come back. Okay, this could be all for naught. I'm just looking at reward to risk at this point. I'm not saying the dollar can't rip higher. Okay, we're in a good position trading wise as far as the positions right now. Risk is small. We got some things on the table that are working. And if this ends up turning over a little bit more, then some of these if it doesn't and the dollar ends up turning up from here again, then we'll go back to the plan before, which was outlined in the old 1230, the December 30th post, if you remember. So, and that would be for us to end up looking for a high at new highs in the dollar index, okay, as per the analog, which at times has been exceptional, with the price action from 1997, 1998, right? So that may be something to watch moving forward as well. Okay, so the point is positioning, trading wise, the big move I think is probably on the other side of the dollar trade, is in lower. Just don't know if it's now or if it's coming from another, from a new high. Okay, so that's where my thinking is on a swing basis. That's where thinking. Alrighty. Okay, so every time I say we're going to look at some dollar pairs, I don't look at dollar pairs. I go off on a tangent. Let's look at dollar pairs. Hold on here. Okay, so there's dollar index. You know my feelings, the bigger picture feelings on Aussie and Kiwi, especially Kiwi, right? I think Kiwi could be kind of screwed. If we look at, look at this thing. This is the weekly chart of Kiwi. It's absolutely gorgeous with this median line and where we topped. Okay, but again, and highlighted over the weekend, we have come into a spot where we could rally, and this is longer term picture, of course. Downtrend support, you'd call this, that became resistance, right? Way back here, and we're at that level now, and just kind of holding serve. We're not doing a whole lot of anything right here. And Mike, I think highlighted the stuff on the short term here, right, recently. So, we could rally a bit from here, but if we do, given the median line that we've got here, I do think on a swing basis that there's no problem looking for a lower high up here. You've got the next support is a lot lower. So, how can I be, generally speaking, looking at the dollar rolling over and think that Kiwi could go lower? Look, just looking at the chart on its own merits, okay? Can't stress that enough. So that's what we're at here. When we look at the daily picture for Kiwi, I follow this right here. This is the fork that goes off, and I think Mike actually has this on the short-term page in his charts from last night. But looking at this, Andrew's line 1216 high, 1218 low, 1229 high. We've come into the lower parallel, shown signs of support, could certainly continue to try to get a bounce here. Okay. I think that the best looking support is probably up around 66.80 actually. You've got the high up here from, I guess that's last Friday. Okay. And then of course the low here from 1218. So former support, turn resistance, etc. You're going to have the median line before then. But if this ends up coming into play, it could come into play somewhere over here sometime next week. Okay. And don't forget the seasonal aspect for Kiwi is actually pretty weak. If you end up getting you end up getting strength within the seasonally weak period, but into resistance, then you kind of want to look to sell that. All right. Moving on to Aussie, same deal here. Not as clean, in my opinion, as Kiwi is, but same idea, right? Sold off really hard from long-term resistance, coming into what you would call long-term downtrend support from a median line. There's a sliding parallel below there, so it goes down to below the lows. Okay, so you could see us get down towards the lows. In fact, if you scroll way out, you can see the pitchfork that goes back to the 1998 low and everything, and that actually would extend down towards where the supports are down here. So that would be down, near 67.70s or so, which is interesting because I think actually that the 127.2 retracement or expansion, if you will, of this entire move up or range is something like 67.78, and yes, it is. It's right there. So 67.78 is actually could be a pretty big spot at some point. That's obviously in 200 points. Okay. And in the meantime, you know that we're actually on the long side right now. And, unfortunately, the target last night was missed by like 10 pips. High was what, 70.49, 70.48. Our target was 70.59. Basically looking for, go to a different chart real quick so you can see it a little cleaner because I know there's a lot of lines on that chart. We were basically looking at the underside of this line, right? Former support, looking for it to become basically resistance. Okay, and so it was like right here. And then you can see the fork that I actually am following the most right here is this one. Okay, I didn't really notice this one until this weekend when I kind of went through my charts again, which I think is important to do every once in a while to kind of not start with a clean slate totally, but look at a chart with nothing on it. Okay, and you'll get a better sense for where the correct angles may be. And this clearly has a lot going for it. It got resistance up here. Okay, we clearly have traded around the median line here for a while. So this is the right angle to look at. You take a sliding parallel. Here, and you can see all the trading along this thing. We actually came into that last night as well. And some Aussie crosses that are somewhat interesting. Again, I'm much more bearish Kiwi than I am Aussie at this point. And you can see that through some of the crosses. But let's take a quick peek here at Euro Aussie while we're on Aussie. Okay, so the problem with the different charting packages, okay, are going to have different, because remember the panic move on 824 up here, you're going to have different levels, like different prices. So the trend lines are going to be like a lot of times like really different, which is kind of a pain, but it is what it is. So at the current juncture, though, you do have drawing from here, right? I talked about that and wrote about that the other day. Drawing from the day before, the 12.2 low on the Euro crosses instead of the 12.3 low, which was ECB, right? Okay, on the 29th of September. And if we're going to continue to get up to that level, it might be on one of these slopes. So, you know, again, same idea as every other market we're looking at. It's all the same damn thing. Okay, Euro Aussie higher, stocks into panic lows, then Euro Aussie turns down. Same thing. Euro Kiwi, a much better looking setup in my opinion. Okay. Following this slope. And you can see the support just about hit today. Look at this on a 4-hour chart intraday. You might get even better. Okay, here we go. So can you see all the support that is on this slope? Boom, resistance, boom, boom, boom. Looking at that as support. Okay. And there's a lot of upside here. And again, mentioned this last night in the update, but you've got what would be now considered a bullish, or not, sorry, I wrote about Euro Kiwi 2 days ago. You have what would be now considered a bullish RSI profile on this, 4-hour chart, love 4-hour charts. And what that means is you get overbought levels at the highs, and you hold, basically the 40 area on pullbacks. We haven't gotten to the 40 area. We got to last night. What we get down to? Well, we were down to 164 area, but not quite 40, more like 50. But the idea is, you're not going to get oversold if you're in a big move higher. And there's multiple other reasons to obviously be in this, idea. Of course, you've got the double bottom with the target up at 73.40. You've got daily reversal resistance all the way at 79.28. Okay, you've got weekly reversal level right here. That's Friday, 73.12. Okay, so there's a lot of upside right here for Euro Kiwi. Okay, and here we have here we go. Oh, commodity currencies are getting absolutely massacred. Woo! Crude's back down a little bit. Wednesdays at 1 p.m. New York time. Markets like to get active again, huh? Right when I do the webinars. Christian talking about EuroCAD. Yeah, EuroCAD. Remember, 43.50 in dollar CAD could be something interesting. That really long-term chart, but you'd have to see a reversal or something there because I'm not trying to top tick this move. But yeah, we'll take a look here at EuroCAD. Hold on. Gary, what's up, dude? Yeah, thanks, man. It's just, I don't know. I've always been that way. What can I say? All right, let's look at EuroCAD real quick. Before I look at EuroCAD, sorry, I want to look at. I'll show you this. So the long term. Remember Euro Kiwi? I just talked about Euro. Yep. Yeah, here it is. EuroCAD on the upside. Okay. You could be looking all the way up towards the upper parallel. This is a long-term weekly chart. Okay, but you're looking up here. That's around 164. So yeah, we're currently 150, 575. So yeah, there's a lot of upside there. Okay. That would be, the next level. There is a level right here just above price, which did cross above the August high, okay? And that's about 156.60 or so. On the daily chart, let's see what we got on the daily. I guess already at new highs. Remember this? This was the old support I think we had looked at. Oh no, it wasn't. The old one was just a regular fork. I'm talking about the one that went throughout like a lot of last year. Yeah, this is the one. So this line right here, again, these old lines, they come into play quite often and can be really quite useful. So you can see this old one, which was, you kind of had support on it. That might actually end up being, resistance again up here. All right. For EuroCAD. Okay. I want to look at pound dollar. Obviously, we're currently in that trade, and here we go. So there's the 31-year trend line. Okay, and we bounced off it yesterday. I put an order down near it in a high volume level just above it today. And yeah, so we came back to it again. So with with pound dollar, excuse me, you're going to see the median line act as probably a big spot. It's like 145. The area that I'd be looking at is kind of the level of resistance, or an area. Sorry, an area to become resistance would be where we had support recently. So that would be the slope that goes off these two lines. There was support here on the 6th of November and was support here on the 2nd of December. Okay. And that is more or less in line over the next number of trading days with about 46.45, which is a daily high from last Friday. So it's also your kind of like your 5-day high, which is always nice. Especially pound likes to take out 5-day highs and then resume lower. So pound, huge level. Think you can get more of a pop before you maybe try to go lower. And again, mentioned last night that if this level ends up giving up, then holy crap, I mean, there's nothing for a while in pound dollar after that. But, we do have some really extreme sentiment going on as far as pound's concerned, and would expect to see some sort of a bounce here, longer than a couple hours, longer than a day, in order to get back to about, 46.50 or so. Dollar yen is bearish now, no longer bullish. And I mean that like on a multi longer term picture. Really nothing else to say that wasn't written over the weekend. 1830s ended up being resistance today, in fact. Remember that was, we wrote about that level here over the weekend. The big thing here with dollar yen is notice the parallel. This parallel goes so far back, right? Multi-year bull market confined within this entire parallel, right? And this line ended up being resistance, right? On the rally back test, okay, that was resistance on NFPs. And we just came up and we hit the NFP level, in fact, 118.33. I think the NFP level is 118.26. I can show you that right here, in fact. Wait for this to pull up. Okay, so here you go. That was the NFP level right here. Right there is NFPs. Okay? Right there. And we just came back and we've tested and held it a couple times. Well, several days really into last night's Asia session just now. So, good example of, the kind of, high volume level, specifically NFP level, coming back into play. And again, this is all with the, with the S&P, the risk on off situation, looking at S&P's coming into a panic low over the next couple days. That means the dollar yen's probably coming into a panic low in the next couple days. This is the yen futures chart, so that would mean yen into a high over the next couple of days. But that price could be pretty, could be fairly, low, considering what kind of moves happen when dollar yen gets all panicky, right? All I know is that the level up here, the high that we had after NFPs, and that is 118.84. That's really the spot, in my opinion, that's kind of your line in the sand, in the bearish sand, if you will. Okay. Right here, right now, very kind of a different mentality trading, kind of not doing a whole lot, because to me the opportunity is to either sell a continuation of strength into better levels or to buy panic lows in a couple days, right? I don't know which one's going to happen, right? If we continue to follow the 2000 analog closely, which at times it's been really close, the next 2 days are going to be really weak. Okay, so it's not out of the question that we could put in a trade to be short dollar yen heading into Thursday and Friday. In fact, I want to see. So 4-hour chart, okay, of dollar yen. RSI, look at since we broke down here, right, except for the bullshit, BOJ move, they rallied it off BOJ and then ended up, the thing's been bleeding lower ever since. But since then, RSI oversold 4-hour chart, okay? This is why 4-hour charts can be really solid in trends. Oversold, failed below 70, okay? Oversold, failed near 50. Oversold, we just failed shy of, of the 40 level. But point being, this is, you're looking lower, okay? Now, from a completely objective type of analysis standpoint, you're bearish on this from an RSI perspective, right? You have this RSI sell signal, right? You've got higher RSI, lower price peak. It's like reverse divergence, okay? You're looking at this and you're bearish as long as you're below 120.65. No one's going to, at least I'm not going to put a stop at 120.65. I mean, that's a valid trade if you want to get really long term and just try to catch like a total crash. You could do that. You could put a stop up here at 120.65, just go short dollar yen now. All right, I'm probably not going to do that. I'm probably more likely to just put, my stop up here, okay, at like 118.80 or something, okay, and look for it, see if I can get a little more continuation on the downside. But yeah, the point being, the picture is lower on this on RSI scale. The question is this a high right here, or are we making another little attempt on Friday's high? Either way, you're in the right area. Okay, you've come into former support regions back here. Okay, back here. That failed on, on Friday at NFPs, and probably looking lower from here. So that's that. Again, would like to wait for the day to end, and then start looking at the charts, make decisions rather than getting all, intraday making decisions. Usually not as clear in thinking and everything else. Mark, I would like this year to end already. Well, give it a little time. It'll turn around. It's it just started, but whatever. Pound dollar. We looked at the the daily charts just now, but you know what? Here's a hourly chart. You could end up writing something like this, right? Just made that low, high, low, hit the median line. It's not impossible that this actually ends up being a structure that takes us to higher levels, 45, 45, that potential resistance. We talked about the bigger resistance potentially or probably being up a little closer to the 46, 45, 46, 80 region. Okay, at this point, that's the 5-day high. So, yeah. So that's what we're looking at. But yeah, there is BOE tomorrow. It should be interesting to see if they end up getting a test of a new low or not. It'll probably be a break even before then, but we'll see. Okie doke. I think I'm going to kind of wrap it up here. We're getting our, our feel for the new year in trading. Certainly open with a bang, and really, there's not on my end. There's not a whole lot to change as far as what I came into the week looking to do or looking for, and that is, looking for panic lows over the next couple of days, probably Friday. And if we're going to get it, I think it probably comes at about the 1840, 1850 region. And, again, think of what all that means. If we get down there, which is not all that impossible considering the volatility in the market right now, what you're going to see is, euro bid, dollar yen tanking, Aussie yen tanking, everything else. here's a question we have from about Aussie yen. Yeah, I mean, look, Aussie yen, same. It's, guys, this is all the same thing, right? It's everything is literally the same. I can show you dollar yen, Aussie dollar, euro dollar, whatever. They're all going to be literally the same. Okay, if the stock market is, we're looking lower in the stock market, then you're looking lower in Aussie yen. If you're looking higher in the stock market, you're looking higher in Aussie yen. Okay. Let me see if I can find the chart that I had up for Aussie yen. I think I put it up maybe, was it last week? I don't know. Let's see here. Okay, here we go. So Aussie yen, remember we did have that wedge pattern we talked about, would have already reached the target actually. You do have a downtrend support here on Aussie yen. Panic in the stock market, if we get it by Friday, then you might see Aussie yen down at like 77 something, 77.50. It might be a lot lower. Yeah, Raj, we had that trade, bud. It's gave it to you. That was presented and everything else. So it was there. Okay, so this is Aussie yen. I'm not gonna tell you which way it's going the next week because I don't see a trade here right now. And again, as I said before, same thing with the stock market. We either panic low into Friday and you get a lot lower in Aussie yen, whatever you want to look at. Raj asking about dollar CAD, asking if I will short it soon. Didn't really have any plans to short it soon. I mean, I can say that again. Here's a dollar CAD. Take a parallel from the 1991 and 2007 lows. Okay, all these highs and lows, all the way up to about 44.20. So, I have no desire to short dollar CAD right now. If it were to trade, back below a level and make a reversal and suggest that there was some sort of a high in place, then sure, maybe there'll be an opportunity to go short. But I can't tell you that I'm shorting dollar CAD right now. I mean, just look what happened to dollar rand the other day. It was up 12%. You know, um, sometimes you get a move like that at the end of a capitulation as everyone tries to catch the top. So just, wait for it, my friend. There's no need to catch the exact top tick of the move, right? This will end up coming back at some point, and hopefully we'll have, an idea of when it's happening. It could be soon, given, the basic hysteria that CNBC covers the market with as far as the oil thing going on. But yeah. And stocks just absolutely taking it. Okay. All right. So that's that. All right. The summary is really all about equities at this point. Can't really stress that enough. Okay. We're either going to panic by Friday, which would be a lot lower, or we're going to, turn around and go back to 1980. I don't know which one it is, but we'll try to take advantage of if you get the panic, which at this point, considering the market's down like 30 points today, that might be what's going to happen. So if that's what's happening, we'll be looking to maybe buy some panic on Friday. Until then, we'll sit with some euro, some pound, have the Aussie, but it looks like it's about to get stopped out. So we'll see. All right. Okay. That's it. And ending it here, we'll be back next week. Mike will be with you tomorrow morning. And everyone have a awesome, great rest of your week. Okay? All right. Take care. Jamie Saettele here signing off.